Morning, welcome to One Financial Markets Morning Commentary. I'm Andrew Johnston. So yesterday, interesting once again trading day because it was so boring, so boring. Trump and his line he has with Korea, and he just keeps on stirring it up, is creating a risk-off scenario at the moment. So we're starting to see dollar start to move up slightly, but we're also seeing portfolio managers, asset managers, traders starting to take positions in risk averse assets. So if you look at dollar yen and if you look at euro Swiss, you see they're all depreciated as investors start to move their portfolios or change their positions into these into the yen and the Swiss, which are historically known as risk averse. And so that's why you saw some movement. So euro Swiss was trading at 115, it went down to 112 something, and bounced back up. But that's, this is the kind of the macro picture that we have at the moment with Trump. Gold traded up at 12.75, was up $10 in the day. Silver went along with it. It's all a risk-off fear at the moment of the unknown of what's going to happen with Trump. But bigger picture here, and I'll keep on going on about the consensus trade and the overall direction of the market. Let's look at euro dollar. It has only moved 158 pips in, 6 days now, 7 days, say. That is absolutely nothing. What I'm more concerned about, and as you guys should be more concerned about as the more short-term traders, is the price action that is happening in between yesterday and the previous day, and the fact that it is very evident that there is a lot of algos, which are automated trading strategies, and there's not a lot of real money, which is basically bankers, hedge funds, the real people who have hundreds of billions of dollars to move in the FX market. It's very, very noticeable that they're not in at their seats. And if I just give you an example, 5-minute chart here. Yesterday, so we had it at 3 o'clock on the day before yesterday, and then 4 o'clock, what auction expiry? Anyway, 2 o'clock yesterday. The market is range bound, not really doing anything, and then a massive puke and a full retracement in 2-hour period. Now, what is this about? This, to me, is algos, systematic trading, finding that the market is long or the market is vulnerable for a spike to the downside, and they are taking out short-term traders and hot money traders. So hot money being people are in for 5, 10 pips, people are in for 2, 3 pips, people are looking to high frequency trade in and out. They've noticed that there's a build up along here and there's stop loss orders in this scenario here, and they've basically just hit the bid. And this is what this puke is here. And it was very noticeable during the day that we're having moves. I mean, here's another one here where we went 25 pips and there was no news whatsoever. And this is basically the hot money which jumped on the back of this short one, all getting stopped out, and it's all retracing. And then we're back to here within a period of an hour and a half, fully retraced. But what is this going on? This is just all you short-term trainers out here who are just trying to make a few bucks here and there. This is a thing that would drive me insane because there's no reason for it. No reason for it whatsoever. At 2 o'clock yesterday, I don't know there was any relevant data out. I'm just going to double check for you. I mean, the only thing I was looking at yesterday was crude oil inventories, which we'll discuss in a second. But at 2 o'clock yesterday, nothing. Some Mexican stuff. 130 was some unit labour cost, but that was all damn squid. Don't worry about it. So this is stuff that you have to be wary of in these markets, summertime markets. Algos, when there's no liquidity, will clean people out. And this is what's happened here. And I'm not just trying to find excuses because my consensus of euro dollar is to go to the upside because I think dollar is going to depreciate even further. and that the Euroland, albeit I think should have probably collapsed quite a long time ago, is still going and is ticking up. Maybe not the 3% growth that we want, but it is moving on an upward trajectory. So therefore, the euro should be appreciating with it. Stuff like this drives me insane, and I'm not trying to just back up my picture of the market. This is just nonsense, and this just clears people out. People who are short-term traders and they lose all their accounts and stuff like this, and this drives me insane. And this is bank or hedge funds or high-frequency trader algos or whatever you want to call it, feeling that the market is at a breach and then just stopping everyone out. And this is what you get these elongated massive moves for. So this is the stuff you have to look out for when you're short-term trading the market, because it's just, when liquidity is like this, it is the most frustrating thing ever that stuff like that happens and it pulls back. So you have to be very, very aware of stuff like this, and or just do not trade in these periods. I mean, look at this. This is the London session, perfect. US session's about to open. So just trade the UK session, and then have a look at the US session. I've always found that the UK session holds in, or there's a directional move, and the US section is just jittery because there's all these other people who don't really know what they do. And let's be honest, London is the centre of FX. So you want to be trading the London session. Okay, so let's look at the data. So we had crude oil inventories out yesterday, which was a particularly interesting one. Well, the only thing that really kind of moved, everything else was based around Donald Trump and seeing how he's going to pan out. And here was a crude oil inventory here at 330. Crude oil inventories was a draw of minus 6451, so worse. So you expected an appreciation in crude oil because they've been less inventories out there. However, this was cancelled out by the gasoline inventories, positive of 3,424. So that's what crossed that out. You thought it should have gone up, it actually came off, and then in the end it didn't really do much. So there was a buy-sell opportunity there, or just another algos, people not really confusing what their data was, but supposedly it was supposed to go up because there's always less inventory out there, but that was negated by the positive gasoline, which was nearly 250% more of what they expected, and then we had this, and that was really the day. And then commodities filtered out. Gold started ticking up a bit more. Euro traded back up to 117.50 after trading down to 15.16s. Dow's just not really done anything, still lingering around the 22,000 mark, which is absolutely fine. And at the moment, it's no real money in the market. It's all just machines, tick traders, and it's just, there's no liquidity. It's really, really frustrating. So just be careful and stuff like this. Of note that happened today was the Royal Bank of New Zealand interest rate decision at 10 o'clock BST this evening. And it came out, let's just get the chart up. They held rates at 1.75. However, dovish tones and the governor there saying that he wanted the New Zealand dollar down, therefore it depreciated. And then this morning, Assistant Governor John McDermott saying he needs to adjust the Kiwi down again as well. So therefore we have this extra move this morning. So this is kind of been the trade of the day. The theme of the day is the milk trade, because New Zealand is a commodity country and milk is one of its prime exporters. But this has been the kind of the mover of the day. Everything else is very stagnant and boring. Stuff out today in terms of market movers, manufacturing production for the UK, and some housing stuff. The FOMC doubly speaks at 3 o'clock, but really kind of nothing. It's Friday really. We're waiting for again for a bit more. However, we have to take on consideration sterling at the moment. I did say, if I bring up the chart here, I just say we're in this channel here, which was just after Brexit. We're now on the support of that channel. If we break that, we're now going to go into the second period channel where we broke after the flash crash. So if we hold here, we should then ascend back up. But The health of the UK, Carney's backtracking on his hawkish to dovish rhetoric. It's all very playing on people's minds at the moment. And I think there's been quite a lot of movement in terms of Chinese money out of the UK property market, which is London basically. They're looking for to move to Europe now based on hot money moving out and acquiring property for buy-to-let in these new regions where there are going to be fund managers setting up businesses, etc. So something we have to watch. But once again, the trade that I've been looking at and have been looking at over the last 13 videos has always been gold, and we're still nicely on target for the 1290 region. And that's just something I have to take. Obviously, Trump helped me out a little bit in terms of his comments, but the 1290 is the inflection point I'm looking for. But as I said before, try not to get caught up in all of this noise. It's very frustrating. There's not a lot of players out there, and so be very specific and do your analysis and then pick your trades appropriately. But for free for the front lines, have a good trading day. I'll speak to you tomorrow.